Last of the day is Krishna Kumar Karwa. He's Managing Director at Emkay Global. He's joining us to take some questions. Mr. Karwa, great to have you with us here. Good morning. Thanks very much. First thoughts, Mr. Karwa, as we are starting in the sort of initial first week of 2023. How are things looking to you? Are they looking a little sort of iffy? We've seen markets being flat here, on the Nifty at least, for the last 2 months, whereas some of the big underperformers globally have done well. What's your sense from here?
Yeah, I think fundamentally we need to understand and probably introspect that is there a structural valuation reset which is happening in the ecosystem, and this is primarily driven by the inflation and the interest rates which are hardening overseas and which continue to expected that they will further harden, and plus what is happening in terms of quantitative tightening which is continuing and which will continue for some time. So I think there is the 2010 to 2021 phase where we had continuously interest rates going down and because of that valuations moved up. So I think that is a fundamental question that investors need to grapple with, is that are we getting into a phase where valuation multiples for most companies have to be reset accordingly. I think that is something which is most important to worry about. As far as, yes, there has been volatility in the markets in the last few weeks and last 1 week also, and that is primarily driven by the FPI selling, and which is again a function of our markets being possibly overvalued versus other emerging markets, and maybe it is expected that other emerging markets like China, etc., could attract more flows than what our markets will attract. So I think that is the phase that we are going in, and in fact, the bellwether NBFC yesterday corrected by some 7-8%. Now, it was a marginal miss in expected AUM growth, etc., and you saw a big correction. Now, this is something which is a cause for concern, which means that stocks which are priced to perfection or which are relatively overvalued for the high growth that they were showing, and now when growth is possibly, so maybe others are also able to show similar kind of growth, then investors are willing to bail out of such stocks. If the stock doesn't correct and come back again, then again it will play into my understanding that we are getting into a structural change in the ecosystem where highly valued stocks will get corrected significantly.
Are you expecting a fall in the first half for the market here? And what kind of a fall, if so?
See, I think it's very difficult to answer that question in a yes and no. I think there are two parts to it. As far as the flows are concerned, if you look at it, so far the domestic flows have been very, very robust. And I believe that the SIP flows, which are say 12 to 14,000 crores a month, that will continue to be robust with not too many changes over there. So at least the domestic flow seems to be robust. Now the question is all about the FPI flows, and it's very difficult to fathom how FPI flows will behave. So you will have these bouts of FPI selling, what we are witnessing now, and primarily that will impact your large cap stocks where their flows are normally FPI selling is much more in those segments. So that's one way to look at it. The other way to look at it is that of fundamentals. Now markets are like kind of priced to perfection. Earnings estimates for beginning of 2022 and now beginning of 24. I think there have not been much 23. There has not been any substantial cuts in earnings estimates. So we have not yet factored in any cuts in earnings estimates for 24. Now if that happens, which could be a function of how our economy works in the light of the global volatility, so that could drive. If there are some earning cuts, then yes, there could be some sharp corrections. So it's a difficult question to answer, but volatility is given, and that's the reason I believe that if the environment is going to be so volatile, then you cannot give a high multiple or you cannot hold expensive stocks in your portfolio. And there can be a significant reset downwards as far as multiples that you give to the various stocks that you own.
Okay.